And you can see it on this chart, which measures total US imports and exports going back to 1950. Beginning in the 1980s and ramping up in the 2000s, the US began importing cheap goods, particularly as China opened up to global trade. Corporate profits soared as a direct result. Look at how closely they correlate. So, globalization was great for Wall Street and the 1% who own most of the stocks. But globalization came at a cost. Domestic manufacturing jobs, which were once the heart of the middle class. The US exported its manufacturing base, and millions of middle-class ladder jobs vanished. And even as corporate profits and productivity have soared, wages have not. This created a massive disconnect between how hard people worked and what they were paid. Take a look at this chart, showing productivity and worker pay. From 1948 to 1979, productivity and hourly pay grew together, but starting around 1979, they split. Productivity kept climbing. Workers were generating more value than ever, but their compensation flatlined. Since 1979, productivity has grown 2.7 times faster than average pay, and the wage growth that has taken place has been highly unequal. The top 1% captured the value of higher productivity, seeing their income grow by 326% since 1980, compared to just 73% income growth for the middle 60%. That's a sure sign that those at the top are benefiting from soaring profits, while those at the bottom are left out. But now we may be seeing the end of this era of easy profits through deglobalization. The average tariff rate in the US is now near 20%, the highest it's been since the 1930s. These protectionist policies have choked off international trade and prompted other countries to respond in kind. As a result, US trade with other countries is tapering off and showing signs of slowing down. We're looking at deglobalization. As you can see, this is not a new process. It's been declining since its peak in 2010. The tariffs are designed to return those manufacturing jobs back to the US and mitigate inequality, and it's likely too soon to say with any certainty how effective this will be.